Adam, this moved the market. I mean, you had, 112 basis points on the 10-year. Clarida comes in, clearly trying to walk back some of Powell's dovishness. What was your biggest takeaway from the conversation?
Thanks for having me, Alex. And I think the vice chair, made a bunch of points that were market moving, including his clarity about what his forecast would be, and that would lead to taper at the end of this calendar year and rate hikes at the end of next year. But I think his remarks in response to my question about long rates were really what moved the markets, him saying that he also doesn't fully understand, like most of us, why long rates have been so low. I also thought it was really important when we asked about flexible average inflation targeting and the new framework that he said in his speech, and he emphasized in the Q&A, that, yeah, if we just get, something in the high twos average between now and between 2000 and next year, that's enough catch up for him. That's enough average inflation targeting. And that's interesting because a lot of more dovish people had hoped that the flexible average inflation targeting would be more of a makeup for past undershoots.
Adam, is it your expectation now that we're going to see more from the Fed in terms of convincing the market that actually pricing a US 10-year at 1.2% or lower is actually the wrong place for it to be? He voiced his surprise. Do you think others are going to do that as well? Do you think we could see a significant repricing here?
I don't think you're going to see much repricing because, Guy, I think in the end, this is being driven by fundamentals. I mean, I think this is being driven by worries about the Fed's commitment, worries about the Fed's ability to deliver higher inflation beyond an initial shock. It's about long-term growth aspects and the possibility of secular stagnation being much stickier and worse than we thought. This is what happens when you see all the bond yields of the major economies going down in tandem. So maybe there'll be some more chatter because I think if anybody asks a Fed official honestly, if they're reasonable, they'll say they don't understand it and the rate should be higher, but they can't jawbone the 10-year that much unless they raise rates at the short end. And even then, we don't know.
Yeah, Adam, let's go global for a second. The ECB is not unanimous. They've made a big show of that. The BOE for like a week wasn't very unanimous. Where does the Fed sit in that?
I think it's interesting. I think, Alex, the fact that this speech was timed so soon after the last FOMC meeting, but yet there was almost nothing where the vice chair seemed to be trying to correct or steer what came out of the meeting. I think you or Guy set it up as maybe correcting Powell's dovishness, but even that I didn't get much sense of. There are occasions we've seen where the vice chair or the chair comes out and tries to say, no, don't believe that person, even though they don't say it. We didn't have that. So this is a much less divided committee than, say, the ECB is. If you look at the SEP and the dots, and I don't tend to take those very seriously, but the spread is not that wide considering the amount of uncertainty that's out there and the amount of weird noise we're getting. So to me, I think this is more unified committee than I would have expected. I think you're right to raise the question.
What should we expect at Jackson Hole, do you think, Adam?
I think, Esther George, president of Fed Kansas City, and her team, have been very creative in putting together topics for Jackson Hole that are not necessarily about tomorrow's monetary policy. So I think there might be a little bit of reflection, tomorrow meaning just tomorrow, not future. I think there might be a little bit of reflection that it's a year since the new framework was announced. But I think it's going to be actually much more focused on issues of equality and labor market. And that is a place where there's a lot of room for debate. As Clarida said, he and the other members are waiting for more data. I also think, again, perhaps unfortunately, it's going to be less international than there usually would be. But one of the reasons to go to Jackson Hole, if you're fortunate enough to go, is you get the central bank governors and deputy governors from around the world. Given COVID, I don't think we're going to be getting many of those at the event this year. And so there'll be less chatter on the international perspective, in my view.
Well, Adam, let's go international. What do you expect from the BOE tomorrow?
Nothing. There'll be some kind of statement, but I think the BOE is or the Monetary Policy Committee of the Bank of England is quite understandably in a watch and wait mode. I remain honestly quite surprised by sterling's strength, given all that's gone wrong with the government's handling of the COVID and the vaccinations, and all that's gone as expected and therefore wrong with Brexit. But in the end, Bank of England doesn't have to do much. The UK's on a recovery path. Inflation is not going crazy. The Fed's outflanking them, and they get, like everybody else in Europe and elsewhere, get positive spillovers from U.S. expansion from the fiscal side.